Hello and welcome to Climate Action as a Job Creating Ecosystem session within day 3 of Pathway to 17 Summit. Today's theme is really embedded in Digital Frontiers 20 for Good movement, which has been launched recently. Now, the 20 for Good movement is a multi-stakeholder initiative that aims to direct at least 20% of the world's workforce towards jobs for good. Now, these jobs, we're saying that they not only are they complying to green job standards or decent work frameworks, but they're also specifically set aside to solving the world's most pressing problems, such as SDG 13 climate action or zero hunger. Which has been discussed before. In this session, I am privileged to have some of my friends here to talk about climate action and investment in startups. So I'll introduce them and start with you, Hannah. Hannah is a program manager at TECA, Triggering Exponential Climate Action, and BFA Global's Livelihoods portfolio, where she leads climate and women empowerment initiatives with a focus on efficient program execution and impactful stakeholder engagement. Welcome, Hannah.
Thank you, Tariro.
Thank you, Hannah. And I have with me, Martina Phiri, a principal at wCap Limited, a pioneering investment management firm specializing in early-stage climate and gender lens investments across Southern Africa. Martina is deeply committed to driving sustainable economic development through innovative capital development. Welcome, Martina.
Thank you, Tariro, and thank you for having me.
Thank you. And my name is Tariro Nyimo, and I'm the head of stakeholder engagement at Digital Frontiers. Now, in this session, we're going to be exploring the role of startups as a source of innovation to solve the world's most pressing challenges, but also creating new job opportunities and driving economic growth. And what we're going to do, it's going to be a two-part presentation, and then we get into some panel discussion. I'm going to hand over to you, Hannah, to share more about BFA Global work, the startups that you're working with, the investments that you've done, the innovations, and the possible jobs with the special focus on women and youth. I'll hand over to you, Hannah.
Thank you so much, Tariro. And thanks, Peggy, for sharing the slides. My slides are a brief introduction in what Tariro has just mentioned, the companies we've invested in, our outlook on the current landscape, and what we see happening and what we see investors keen on within this space. So this first slide, like Tariro has already mentioned, I'm the program manager at TECA, and like she's mentioned, other than what I do right now, prior to this, I actually was a founder of an agribusiness, and I founded 2 businesses in my past and have been in the space of operations and project management. So shifting to this other side of being on the working side of working with founders has been a very fulfilling experience over the last year in this role. I think we can move to the next slide, Peggy. So this slide is an impact slide, which basically should walk you through what we've done so far at TECA. So we've empowered over 40 founders. And what that looks like is in TECA, which stands for Triggering Exponential Climate Action, we onboard founders from all across Africa. Our current portfolio reaches about, I think, 12 African countries. So all the way from Egypt down to South Africa, Zimbabwe, Zambia, Mozambique, Madagascar, Kenya, Uganda, Tanzania, Nigeria, Ghana, you name it. Like, it's quite a vast portfolio. And we've reached out to these different founders. And in our program, at the beginning, we expose them to these things we refer to as masterclasses. So hands-on equipping skills, all the way from ABC Impact, and all the way to entrepreneurship, that is forecasting, budgeting, etc. And those 80 founders, in the first wave, which was our initial wave, which we call the Africa Blue Wave, had about 30 founders. And then in this current wave, we had about 44 founders. So going up to about 80. And then some of the founders end up bringing co-founders from externally. So they end up rising up. So far, our count is about 80 founders. We've invested about close to $1 million across our different founders. Usually our ticket sizes are about 55K, which is a split between venture building and cash. And of that investment that we've made, the different companies have been able to raise follow-on funding of about 234,000 from different sources. That is outside of the revenue generation that they're making themselves. And out of all of those founders, within Teka, 17 ventures have been launched, which I'm going to talk about in the next slide. So when I tell you about Teka is a venture launcher. So Teka is a program that allows different founders with different skill sets, all the way from science-based to commerce to technical-based. All of them, we bring them together. We have this thing that we call an in-person huddle where they get to interact and meet these different people from all across Africa. And they also usually come with concepts in mind. They either are pursuing a profession, pursuing an idea, and they come together and develop these ideas. So beyond the Genesis stage, which I mentioned is where we do our masterclasses, the companies that come up at the top are the ones that receive the 55K in funding, and they move into this stage that we call traction. And in traction is where one of our project leads, which is a venture builder, will come and become an extension of that team. So work with that team, identify the biggest milestones that they need to achieve in order to become at least revenue generating and to have developed a minimum viable product. So that person either comes into the team as an extension of a coach, someone who will help the team with recruitment, someone who will help the team refine the technical solution that they're creating. If it is a physical prototype, someone who will help them work that out. We also help them with forecasting. We even come in to some extent as a coach in terms of conflict resolution. So we come in during the months that traction takes place, which is about 3 to 4 months. And that is the time where our team becomes an extension of this team. And through that, you can clearly tell that our three pillars are talent, because we invest in team solution fit, meaning we invest in the founders and how well that correlates with the solution that they're trying to bring to life. We invest capital, like I mentioned, 55K ticket, which is split between 27,500 cash and 27,500 venture building services, and ecosystem. During this program, we try to expose our founders. So we bring them across different ecosystem players, that is potential investors, advisors, mentors, people who can walk with them this journey and also believe in them and potentially invest in them in future. And we're proud to say that as Teka, we are very gender forward and do everything with a gender lens. And so far, we've been able to create a portfolio that has an average across all of about 48% female representation. Peggy, I think we can move to the next slide. This is a good snapshot of the companies that have come out of Teka. It's just a few because, like I mentioned, we've launched 17 companies, but these are, I believe, about 9. And I'll just touch on a few because I wouldn't want to delve into each and every one of them, but please do take some time later on in the day, if you do have some time, to look at our Teka website. There you'll be able to see the different companies that have been launched, what they do, for those that have links to their actual websites, because some of them are very software based to move from there to look at them. But for instance, within the renewable energy space, in this current wave, we have a company known as Plastic, and Plastic is a science-based company that converts plastic to cooking gas, and that is within the clean energy space. We also have Sunwave, which is both within cold storage and also deals with solar. So they created this solar-powered ice storage, which is to create ice in the markets for fishery, for for people in the fishery industry to reduce loss, and also for easy availability in smaller scale rather than a big cold storage facility. And then we have ARC, which is in the IREX space, which is more like the carbon credits, but for renewable energy. And they help renewable energy projects get entry into the new renewable energy certificates market. Moving on to sustainable agriculture and fishing. Like I said, in TECA, we've had very many 2 waves that have been focused on the blue economy. So we currently have a few companies that are within the green economy, but not too many within the space of agriculture. So rather than just focusing on agriculture, I decided to bring some that are focused on sustainable fishing. So for instance, we have a financial services company known as VOA, and VOA work in fishing communities to help the people in the fishing communities save and have a more formalized form of savings where they can keep a track record, because most of these people deal in very small communities where they handle physical cash, and they don't have a track record where in the end, if someone decides to get a loan, they wouldn't be able to have any papers that back it up. So VOA is working with these fishers to come together, save their money. And once the money becomes a substantial amount during the low seasons where many of them are not able to make too much money through the fishing, and to avoid them needing to overfish to meet their daily needs, which is sustainable fishing, the savings that they made during the high season can now be accessed during low season. And also those funds can be used to get good fishing equipment, which will also help protect the fish and promote sustainable fishing. Yeah, and that's just a few snapshots of the companies that have come out of TECA. There are a few there that nature-based solutions. We also have quite a number of others, so please take some time to have a look at our website. And yeah, thank you for the opportunity to walk you through this.
Thank you, Hannah. It's interesting to know that not only is TECA supporting young people with great ideas to launch their startups, but it's also impacting communities, giving a voice to those that are hard to reach or invisible. So this is exactly what 20 for Good is all about, as we look to the future, as we create these new jobs. And as we also support startups. I'm going to move to Martina. Martina, I'm sure you have a lot to say about what's happening in Southern Africa or what's happening at wCap. So I'll hand over to you.
Okay, thank you, Hannah. Okay, please confirm if you can see my screen.
Yes, we can.
Thank you. So as Tariro mentioned, I'm Martina and I'm a principal at wCap based in Zambia. So wCap is an investment management firm that invests in climate-led solutions with a gender focus across Southern Africa. Our main mission is to empower women-owned businesses and women-led businesses. Well, like I said, we're headquartered in Zambia, where I'm based, but we invest in Namibia and opportunistically in South Africa. We are currently launching a $10 million early stage investment management firm that will invest in businesses, the ticket sizes between $250,000 to $1 million, and this will comprise of a combination of both debt and equity. So as much as we are in the process of launching our fund, we have already made some investments in the second half of the year. We've invested in 2 out of the 3 countries so far, and we have invested just under $1 million. These investments so far have resulted in a creation of over 300 jobs because of one of the portfolio companies in the value chain they have. I'll explain a little bit more about that later. Also, again, one of the companies within our portfolios, within our portfolio at the moment, has already managed to save 1.5 megawatts of renewable energy capacity. So this is something that we hope to see also as we onboard more companies in the coming years as we reach the first close as well of the fund. The fund aims to reduce 500,000 tons of greenhouse gas emissions as we expand our operations in both different countries in Southern Africa. So currently, like I said, we have fully deployed capital in one company, and the other two deals are live one. The first company we deployed the funds to is a company called Luwano Food Company. It is based in Zambia, and it's an agro processing company. So this company initially started by aggregating honey, processing it in a sustainable way, and also training the farmers who process the honey as well on sustainable agricultural practices. They are now in the process of diversifying into avocado oil. This is a market that is very underrepresented in Africa, although there's a high demand from Europe and America. So this company has been able to tap into that value chain with the new machinery, and also been able to empower both on the value chain side, both the honey growers and also the avocado farmers, who they ensure that they are using sustainable farming practices. So this company falls both on the climate mitigation and climate adaptation in terms of the climate impact of the business. The second two deals, like I mentioned, are live deals, so we cannot mention the names until the press releases is out. The first one is an HR and data analytics company with a SaaS business model, and also they use the franchise model in their operations. Because of the franchise model, this business has been able to reach other HR practitioners in 8 different countries who are rolling out already in the last 3 months. That's how much our impact has been able to make in the investment. This company also aligned with the 2S criteria, which is a screening criteria we use when analyzing and assessing the businesses. So for those who have not heard about the 2X criteria or the 2X challenge, it basically looks at a business in a gender lens, but through different tiers. So the first tier would be we look at if the company is owned by a woman, or if the company has majority shareholders in management. And the third tier, we look at the employment, the products and services that the business offers, if those products and services ultimately benefit women. The fourth tier looks at the value chain, and if the value chain employs majority of women, which is supposed to be above 50% of the women. So that's one of the screening methods we use here at wCap. The third company is a company that is not based in Zambia. It's within the Southern African region. This one was very interesting because at first glance, you'd think that a meat processing company does not qualify as a company that has climate practices in it. So upon due diligence and a deep dive into the company, we found that they promote sustainable agricultural practices, even in the way they rear their animals and the animal to land ratio. They make sure that the land also is constantly cultivated, and it supports cattle rearing practices and the use of organic and chemical-free production. In order to test this out, we tested their products and services against what is in different markets in Southern Africa. And what we found that this company uses little to no chemicals in their production. So we're very pleased with that, and that's what made us go ahead with the discussion. So in terms of driving growth and job creation through climate resistance, there are 4 different tiers that we have noticed that climate, based also on what's in our portfolio, is that when you invest in businesses that have a climate focus, they help resilient community and also maintain the jobs. I spoke about this as well in relation to the first company we've invested in, where they have both in Zambia and also in the value chain, which spreads outside Zambia. So it help these farmers have a consistent income because they're off taking the produce and the avocados and the honey from these farmers in the communities. So that's an example of a climate resilience job that our portfolio has created. Also, we believe in not working in a silo. We believe in private sector, in public sector dialogue, and this is through policy-driven job creation. So with climate action, so we make sure to always highlight the benefits of climate businesses and how we can also impact the policy creation within the country that we work in. Of course, also our portfolio has created economic benefits through the climate companies that we have invested in, as well as accelerating clean energy. We have already given an example of the company that has already managed to save 1.5 megawatts in renewable energy, and we hope to see this spread across our different portfolios. So thank you very much for your attention. I've put my contact details and our website there for you to keep learning about us. Follow us on all social medias because we have exciting press releases and announcements that will be coming in the next few weeks. And I will end my presentation here. Thank you very much.
Thank you, Martina. Okay, now, Hannah and Martina, without the slides now, you've presented so much exciting things for startups out there, for young people who have ideas, especially in climate action, in renewable energy, in SDG innovations, right? Let's talk about the investment landscape. If we are young founders who have bright ideas, and Martina, you talked about criteria, and Hannah, I am sure you have many criteria Africa-wide on how you choose these 80 founders, these 80 venture launchers. Let's talk about that, the investment landscape and what sort of challenges that these people are facing as they try to launch jobs for good, as they try to build these innovations that are solving the world's most pressing issues. I'll start with Hannah.
Thanks, Tariro. I would say that specifically climate mitigation, which refers to cleaning up the effects of what has already happened due to climate change, has been ongoing for a little while. However, climate resilience and innovations within the climate resilience and adaptation space are a bit newer, So the landscape is definitely expanding. It is gaining traction. There's a lot of new innovations that are coming up within this space. And it's good to see that. However, I think even as the growth is happening on the side of the innovations, there is a bit of a gap because I feel like funding isn't growing at the same rate. Impact-based funding that isn't structured similarly to the traditional VC or traditional investment models, because a lot of these innovations don't fall within the rigid or traditional structure because, one, they're innovative. So many of them are trailblazing. They're new in a lot of what they're doing. They're experimenting. So what I think is that there's a lot of growth, and a lot of companies are also starting to shift and have a certain percentage of their investment budget going towards climate-focused innovations. However, I feel like I know that the capital is not growing as fast as the innovations are, and I would like to see a lot more investment in this space, and not just any form of traditional investment, but more blended finance, and more patient capital that can work with these founders and help them evaluate, evolve, grow, not investments that are very short-term goal expecting very quick and fast and big results. I feel it needs to be shifted a bit from the traditional infrastructure to a more patient and flexible one. Yeah.
Yeah, thanks, Hannah. And I think the issue of patient capital it resonates a lot with startups and MSMEs and women-led businesses, especially, right? I'm going to move to you, Martina, to share your experience about the landscape and how you've experienced it and some of the challenges that your founders have faced.
Yeah, all right. Thank you, Tariro. And I concur with Hannah's sentiments on the funding gap that exists in Southern Africa, particularly for climate businesses. and also for women-led businesses. There's a report by the UN adaptation report that highlighted the $41 billion funding gap that exists, and only 30% of that money is coming to Southern Africa. And from that 30%, women-led businesses with climate solutions are only getting 2 to 3% of that funding. So some of the challenges we see is, of course, the funding that comes in. And the reason why the women-led businesses or climate solution businesses get little to no funding is because there's a misconception that climate businesses will not give you the returns that an investor would be looking at. So there's always that mismatch as well. Also, another challenge they face is the climate businesses sometimes will lead with the impact and not highlighting the financial returns. So even in the advisory arm of the business, that's one thing that we focus on. Like, yes, we are focusing on environmental impact, nature-based solutions, but also lead with the economic opportunity that exists within your business and that you can give as well to an investor who might not even be an impact investor.
Thank you, Martina. And in your presentation, if you allow me to dig a little on your companies, you mentioned an HR analytics company. Can you explain more, since we are creating jobs for the future, since we are launching and you have invested or your company has invested in this HR company, it has managed through those obstacles and criteria and still come up tops. What exactly is this company doing?
Okay, that's an exciting company. There are a lot of similar companies that exist, or they might appear similar. But what's different about this company is that they look at HR from a cultural context. So what's been happening in Africa, we just adopt practices that are global, and without realizing that sometimes the culture we come from will affect how we work within the workplace, how we make decisions within the workplace and other subordinates. In Africa, for example, we have a thing of respect and Ubuntu, where we respect your elders. But then what happens if you are a young person who now has to manage people who are younger than you? So this HR analytics data platform, one of the things it does is it analyzes those kind of situations and makes growth plans for different businesses who are onboarded within the organization to help them navigate such kind of challenges. They also offer different recruitment packages, also with a cultural context. Also, funny thing around the cultural context, also Africans sometimes tend to favor someone who comes from within our culture, who speaks our language, even though the other person might be more qualified, but just because someone is from your same tribe, that's the person you're going to favor and give a promotion. So even as you are recruiting a person, and those questions are incorporated into the assessments that are given, or that is taken into consideration, and not necessarily to hinder a person from getting the job, but just to get a sort of more understanding of how they will work within the workforce and how to extract the benefits from our kind of African context culture. That's some of the things that the company does as well. Of course, that data that's been collected over the years, then they give analytics, and they're able to also give career progression plans as well for different individuals within the organization. So if you find that your head of department, for example, resigned, there's already someone or 2 or 3 people in line who have already been trained to take over that role.
Thank you, Martina. And I think we're already starting to talk about skills. And I know, Hannah, you mentioned in your presentation that the Teka team integrates itself to these founders and helps them in conflict resolution and people issues. Can you share more about that kind of support?
Sure thing. So in Teka, we have part of our team member. He's a team architect, as we refer to him, a team architect, meaning he comes in not even just at the point of conflict resolution, but even at the time of team formation. So he comes in right at the core and helps the founders map out, for instance, you're one type of personality type, someone else is a different personality type, and he creates these maps. He does some linkages to see how well can different personality types work together. And from the journey of even working with our team architect, I learned that there are different islands, there are different personality islands. So there are some personalities that could work together. There are some archetypes that work together. There are others that are very far between. So they could work together, but the longevity of the relationship can be a bit fragile. So he comes in right at the beginning. So we map out personality types, and then we also try to encourage complementarity of skill sets. So a team should have diverse skill set. We can't all have a commercial background. We can't all have a technical background. We can't all be software engineers. And especially being in climate innovation, or climate innovation, so dealing with mitigation and adaptation, it's always good to have someone with some knack for science. So you end up having a team member, maybe someone who has a history in agroforestry, or someone who has history in biochemistry, or someone who's dealt in the world of carbon credits, different professions, but all linked, because tech is what is very scalable. You have something that has a tech element, it's able for it to be scalable whether within the African continent or globally, right? So all those aspects are right from the beginning. So personality complementarity, professional complementarity. And then now when the teams come together, usually teams go through this season known as storming, which is right from the beginning when they come together and they're just learning their ways of work. Each team has different visions, different values, but you want to have a point where there's a bit of call and tag, and then during that period they're figuring out their ways of work. So this person works in this way, I work in this way, where can we meet in the middle? And usually that's what's called the storming period, which is quite normal across board. And for some it happens before, because some teams come already set, and then for some it happens during the program because they're just coming to meet at the program. So they have that period during the program where they're learning ways of work. And then after that there's a period called norming, and norming is where the founders have established a way of working. We've decided so-and-so is very good at partnerships. They're good at pitching. They have the voice. They're very network-oriented, charismatic. Then we also know someone else, let's say our software developer. He isn't very out there, but he wants to be recognized because he is a very big fundamental part of the team. So he's brought in at the significant points of public interaction, but otherwise he's the one doing the hard back-end work, right? And then there's a different elements. And then we realize maybe our software engineer, he works better at these hours. Our charismatic person is out in the afternoons and the evenings, forever at cocktail meetups, pitching events, etc. Then there's another person who's also trying to figure out how is our money looking, like the person who has a commercial background. So they go through the norming stage where they all understand what one another's ways of work, and then they figured out and it's working, right? But then in situations where there's elements of conflict, now our project lead, who is a venture builder, we don't particularly always pull in the team architect at any point in time, steps in. And because this person has been a part of this team, checks in with the team weekly, knows whatever is currently going on in the team, helps the team from an outsider perspective with insider context to come together and resolve whatever is currently going on. But even beyond that, that project lead is helping them identify what milestones they need to hit and helping them hit that track record, because our venture builders have been entrepreneurs themselves. So the people who come in as venture builders here at TechHub, which is an extension of BFA Global, have been entrepreneurs themselves, whether in the software engineering space. I mentioned to you that I have been in an agribusiness myself. So we come in as an extension, but also with the mindset of a former entrepreneur who understands the struggles that the daily entrepreneur is going through. So we come in and we pull on all hands on deck. So it's not also just the one venture builder with one perspective who is as an extension of that team, they have access to the rest of us. So usually we have generally regular check-ins where we can pull from resources all across board. So maybe I'm the venture builder and I come in as an extension and I've had a software background, but then the team that I'm working with have, for instance, they've hit a snag with their prototype, and for them it's a physical prototype. Then we pull in the specialist who has a physical prototype background. Let's say, for instance, they need help in financial forecasting, and me as a software engineer, for instance, I don't have that background. I pull in the person with the finance background. Maybe they need to really define the climate angle. And that climate angle, what is the adaptation, biodiversity, conservation, the whole ABC impact thing? We pull in the climate expert. So not just the one venture builder who is dedicated to that team, but the whole team in extension can come in and help resolve whatever snags, whether team related or externally related, that the company is going through during the period of the support.
Well, thank you so much, Hannah, for that explanation. And I must say that the 20 for Good movement has introduced me to a lot of scientists, which is quite exciting for us to be building that kind of skilling or capability, especially within our young people. And then also just the skilling, I think, that you're talking about, that is required even as we move to building more jobs. There's really need for that skilling within the startups or the youth with the bright ideas. So I'm really enjoying listening to what Teka is doing. It really sounds amazing. Now, Martina, if you could give advice, especially to women startups. I mean, we've spoken about a lot of things, but if you were to give advice to a woman startup in climate action, I have good ideas, I have good intentions, I am bright. What would you say? And before you answer, I just want to check with Shumani if we have any questions that we need to respond to.
No questions so far, Tariro.
All right, thank you. So Martina, back to you. Give some young woman advice out there.
Okay, all right, thank you. So my advice for women in business and also just startups is to not only look at climate as an opportunity or for change, but also as an opportunity to get financial returns. Whenever in our portfolio, whenever we are accessing businesses, we do what is called an ESG screening. And obviously the climate segment will fall on the E side of the ESG screening, and we normally do an ESG score. What tends to happen is that sometimes, and even we do this as well, even through our advisory services when we're building businesses to invest in, businesses tend to unlock opportunities through that process. So, for instance, someone who never looked at the environmental impact of their business would see, okay, so we can actually, by doing this with the environment, we can actually earn extra income and extra revenue. So it's not only about the impact as well, but also about the financial returns that the business can get while still promoting sustainable practices in the business. That's for businesses. And then for the investors, also, I would urge investors to look at the long-term perspective. As much as they're looking at your returns, which are usually between a 5 to 10-year period, or sometimes can be 7 years. But if you invest in businesses that have sustainable practices, you're looking at it over a generation, for example. Electricity has just come up. That's an impact of climate change that we have here in Zambia. So as I was saying, for investors, also look at the long-term perspective on the picture. Which might benefit your coming generations.
Thank you, Martina. And I like that you introduced the you said renewable energy effect that we have on the continent, actually. Now to you, Hannah. And I know you spoke about this before, about the evolution of investments, patient capital, and how impact investors need to look at things more differently. And I know Martina mentioned it just now about sustainable investment. Can you dig a little deeper and speak to the investors now, and maybe talk about the evolution that you would like to see?
Yeah, so I did talk about it, but I'm very willing to reiterate. I think it's essential for us to, especially as investors, to foster a flexible and patient environment. And like I said, that'll allow the startups to thrive, to experiment, and ultimately, in the end, it'll benefit both the founder and the investors. It doesn't mean that when capital is patient, it does not bear fruit. No, that's not what it means. It just means that it's flexible because it's not a tried and tested way or a tried and tested solution. So we need to be able to be adaptable. I would say for a lot of climate solutions, this is a bit of a digress, but a lot of solutions within the climate space that have already paved the way. Let's say, for instance, there are some solutions that have already been, let's say, some for cold storage, some have been proven to be profitable, others not so much. So when there's a model that has been done and has been figured out and people have gotten money out of, more investors are willing to test the waters because they'd say, oh, I've seen this. This has been done. Someone else has been able to get out, right? But that's not, as much as that is a good entry point, I think that once you have your feet slightly in the water, be willing to experiment a bit further because you might be surprised that the investments that seem the most unusual but still possible, strange in that it hasn't been done before and a different approach rather than the traditional approach could be beneficial. And since I actually wasn't even aware, Tariro, that you were really going to diverge and get into a lot of the team architecture elements, but what I already wanted to tell the founders was for them as a team, like I tend to feel that the team is even bigger than the solution because a team can continue to reiterate and re-evolve a solution. So what I would tell founders is having a strong team is fundamental, and it's fundamental success to a successful startup. To be deliberate in your thoughtful choices in building your team. That is the complementarity of your skill set, the complementarity of your personalities, and also a union in your values and your vision. When the investor is investing, they're not just investing in a solution, they're also investing in the people behind it. And the longevity of a solution is dependent on the people behind it. Yeah, so that's my dream for founders and also what I would encourage investors to do. Yeah.
All right. So thank you so much. I think that this has been quite an informative session. We have explored the jobs that within climate action, within SDG innovations. We've explored the innovations that can come through it. We've talked about skilling and looking at the teams and looking at the criterias that make you successful, the successful factors that can make an investor listen or invest in your actual opportunity. And we've applied a gender lens. We've talked about women and how the opportunities are there or lack thereof, the trends in investments, how much is coming to Southern Africa or the African continent, and how much of this is actually getting into women's startups, and the role of startups in creating jobs and the number of jobs. I know Martina mentioned 300 jobs, and you mentioned 80 founders continent-wide across many countries. I mean, and bringing together those kind of teams who are doing amazing work within climate action, within SDG innovations. And yeah, we also encouraged our young founders or our startups to make money, to look at the successful models and follow that. Yeah, I just wanted to thank you and say again, Hannah Eskinder from BFA Global, thank you for sharing the Taker story. Martina Jane Phiri from wCap, thank you for sharing your story again, and thank you for giving us that landscape. I think we can say our job is done here.
We actually have one question I can see in the chat, Tariro.
We do? Yes.
Yeah.
Okay.
Yeah. And since it's directed at me, I can quickly just answer it.
Sure.
So the question is, Hannah, how do you think the personality and passion perspective of people can be harnessed to help businesses, especially for SMEs? Passion usually is the reason I think that people initiate or even venture into a business. So passion I think is a fantastic initial spark because it'll encourage someone to begin a venture even before they have all the facts, which sometimes can work to their benefit, right? However, I don't think passion can be relied on forever. I think more so passion needs to be translated into discipline because sometimes passion can be hit with hard ways around the road or something difficult, and sometimes it finds it hard to hold fort. But if the passion can be converted, passion can be the vision and the drive, but discipline needs to be implemented to make sure that this follow through, you know? Yeah. I think that's all that I have to say. Martina, anything you have to add on to that?
I will not add on because someone just said we have 2 minutes left for the session, but yeah, that's good.
Okay, cool.
Sure. I think it's been very interesting hearing the people side of things, the team side of things that has come up in the conversation. Yeah. But I think we can end there and say goodbye. And thank you very much, Martina and Hannah.
Thank you. It's been a pleasure.
It has been. Bye.